Hi guys, welcome to Creator. So in this video, we will be discussing about balance of payment. The agenda is that we'll be discussing certain terms like we'll be discussing BOP, we'll be discussing BOT, capital account, current account deficit. One more thing, this chapter is not so important for the purpose of your exam. You might have a question, you might not have a question. But yes, sometimes or the other, you can find one question in a year from this particular topic. So we'll be covering this topic along. Talking about balance of payment, it is the record of all economic transactions between the residents of the country and the rest of the world in a particular period of time. So what exactly balance of payment is? See, you do not have to go much in detail. We'll be just covering the things for the purpose, essential to the purpose of exam. So when I talk about balance of the payment, what is balance of payment? See, we are doing certain transactions with outside our country. See, we can buy goods within our country, we may buy goods outside the country as well. So when we are buying or we are investing in certain assets in outside the borders of India, all such transactions are termed in foreign terms. They require foreign currency. And all these transactions which are going out and which are coming inside, which are coming in, when all these transactions are recorded in a paper, you could just say in a paper, it is called as balance of payment. So we are giving money, we are getting money, all that when recorded economically, all together, all that is called as balance of payment. So basically you could say that India's transaction with the rest of the world. It can be with USA, it can be with UK, it could be with China, it could be with Japan. So all the economic transactions means which we can measure in terms of money, that is goods, services, assets, all these are when written on a piece of paper is called as balance of payment. But most importantly, I would say that there are two accounts in a BOP, that is current account and capital account. When we talk about current account, what is current account? It is the record of trade in goods and services and transfer payments. So current account is specifically related to, see, there were two types of account. So one is taking care of goods and services. So specifically all the goods and services that we are dealing with rest of the world, whether we are buying or whether we are selling, are recorded in an account which is called as current account. So you could say that balance of payment is divided into two categories, current account and capital account. In the current account, what is recorded? Goods and services. All these are recorded where? In your current account. So the components of current account are trade in goods, trade in services, transfer payments. Transfer payments are basically the remittances that we are giving free of cost to other countries. Maybe gift, right, or donation, charity that we are doing, that is recorded in transfer payments. Trade in goods, everything, visible items are called as goods, invisible items are called as services. So trade in goods is basically visible items and services is invisible. So current account constitute visible items, it constitute invisible items, it constitute transfer payments, which are one-sided transactions. Now the current account is in balance when receipts on current account are equal to the payments on the current account. So in a current account, when what we are getting and what we are paying is equal, we can call it as a balance situation. A surplus in current account means that nation is a lender to other countries. A surplus in current account means that we are more of a lender, and opposite will result in borrower. When there is a deficit, we are current account deficit, that means we are in a borrower situation. We have taken more, we have paid less. So balance on current account has two components, balance of trade, balance of invisibles. Balance of trade would be related to whom? Only goods. Balance of invisible will be related to services. Now, balance of trade is the difference between the value of export and value of import of goods of a country in the given period of time. So when we are specifically talking about goods, it is balance of trade. Now when we are talking only about services, it is called as net invisibles. This is related to services only. It is related to goods. So balance of trade is what? It is the balance, or you could say it is the difference between the import and export of goods, whereas net invisibles, it is the difference between the value of goods as well as, only the value of services. Now, current account surplus means receipts are more than payments, balance situation will be equal, and current account deficit. So what is current account deficit? It is that the country is in what? Borrower situation, right? So current account deficit means that our payments are more than our receipts. Now, capital account, it records all international transactions of assets. So this is not related to goods and services, rather it is related to assets. The components of capital account will include investments that we are doing, external borrowings that we are raising, and external help that we are getting from other countries or assistance that we are getting from various organizations. Now, capital account surplus is capital inflow is more than capital outflow. Balance will be obviously equal, and the opposite will be capital inflow is less than capital outflow. So that is capital account deficit. Now, what is the key takeaway? See, you can just have a glance of BOP as a definition as a whole. Then again, balance of trade definition. Then current account deficit definition. Also remember that there is a situation, there is a word called twin deficit. Right, so in the condition of twin deficit that our country is facing, it is current account deficit and fiscal deficit. Now, fiscal deficit is related to what? Fiscal deficit was related to budget, if you remember, and current account deficit is related with import and export. So, if there is a question asking what are the twin deficit, like what are the let's say there is a question, India is facing the twin deficit problem, which among the following are referred as to twin deficit? So, the answer would be current account deficit, right? And fiscal deficit. Altogether they are called as twin deficit. Both of them are together called as twin deficit. I hope this session will help you. If you have any query, you can ask us, you can rate the video, and you can reach us at the contact number or the email ID that is given at your portal. Thank you. All the best.